Welcome back to the channel. A lot to unpack this week. Bank of Canada just had their meeting on Wednesday. They held policy rates steady at 5%. Want to take a moment and highlight some of this conversation when we could see rate cuts, because the Bank of Canada is really changing their tune this time around, especially with another rate announcement coming in June. We have CPI data coming up in April on the 16th, the federal budget. We have hot CPI inflation numbers coming out of the US. And how is the Bank of Canada going to look through this data, them and the governing council? So I want to take an opportunity to go through some of these points, talk a little bit about housing. Bank of Canada touched upon it, what they see happening potentially as a byproduct of everything in the housing market. We'll talk about that on this week's episode. So we welcome you back to the channel. It is Friday, Finance Fridays, and I'm your host, Anthony, with In Touch Mortgage Solutions. And if you're new to the channel, we invite you to subscribe. Don't forget to hit that notification bell, like, share the video, but most importantly, don't forget to leave your thoughts, questions, and comments in the comments section below. Let's get right into it. Now, earlier this week, we heard from the Bank of Canada where the governor of the Bank of Canada, Deputy Governor Karen Rogers, came out after they announced their policy rate was going to hold steady at 5%. That wasn't any news that many Canadians should have been alarmed at. We were expecting the Bank of Canada to hold. Ultimately, there was a small conversation on the possibility of an April cut, but most likely that sentiment is now shifted to June, especially after listening to the press conference and hearing what the governor of the Bank of Canada had to say. I want to clip into the question about the possibility of rate cuts coming in June. Here it is.
So let's get started here in Ottawa, and our first question is going to go to Najud Al-Maliz of the Canadian Press.
Morning. Is the door open to a rate cut in June? Is that within the realm of possibilities for you?
Yes, it's within the realm of possibilities. Look, I think we've been pretty clear. We are encouraged by what we've seen since January. If you look at our indicators, they're not all progressing at the same speed, but they've all been moving in the right direction. Inflation's come down, core inflation's come down. The more timely 3-month measures of core inflation suggest there's downward momentum. Yes, shelter price inflation is still high. There are certainly some things that are still supporting inflation, but things are moving in the right direction. We're encouraged by that progress. We need to see that progress continue. And if things evolve broadly in line with the outlook that we've published today, we will be becoming more confident that we're clearly on a path to 2% inflation, and it will be appropriate to cut our interest rate.
So ultimately, this is a big shift. I mean, yes, the door is open. Some people might say, hey, it's a possibility. Yes, but the fact that the Bank of Canada over the course of the last little while has been very cautious on the wording that they've chosen, especially when asked multiple times by the news outlets about when the cut will happen. This is the first time that we're hearing that conversation around, yes, it would be possible, it's on the table. And that's because if we look back at the data that came out in these surveys that the Bank of Canada uses, that's the consumer expectations, business outlook. The data is pretty much showing that businesses are not going to be passing on all these higher costs, or at least the ones that they've interviewed or surveyed, and consumers and the expectation for inflation is pulling back in the short term. That means a lot of people believe that were surveyed that, hey, the Bank of Canada will get inflation back down to 2% at some point. And ultimately, if we look at what's happening in the Canadian economy, we are seeing unemployment tick up to 6.1%. This is very alarming for the economy as a whole, but for the Bank of Canada, this is really good news because it means that things are decompressing. We're definitely seeing more supply than demand in the system, especially when it comes to labor, wages, and growth. Now, they're obviously changing that forecast. They're changing that forecast to a little bit more growth by 2025, 2026. But ultimately, this is a forecast, and ultimately things could change. So the overall sentiment that we're gathering from this most recent press conference is that there is an open window for rate cuts to come sooner than many had expected. Now, in light of this recent data, and this is what the Bank of Canada has really pointed to, say, hey, this is new data. This is just coming out. Things are starting to roll over.
Now, I realize that what most Canadians want to know is when are we going to lower our policy rate? What do we need to see to be convinced to cut? The short answer is we are seeing what we need to see, but we need to see it for longer to be confident that the progress towards price stability will be sustained. The further decline we've seen in inflation is very recent. We need to be assured it's not just a temporary dip.
If these things continue to trend properly in the right direction, right, and unemployment continues to tick up, we see growth stall out, wages start to pull back, those increases in employment, the number of jobs being created is pulling back, all the negative stuff in the economy, if that continues to worsen, while the Bank of Canada is going to have to act very quickly to try to remedy that, because ultimately the conversation among some economists right now, when you look at what's happening, well, let's just rewind to 2021. In July, as we started to see the inflation numbers really start to tick up, 2021 into 2022, we definitely saw things trending down, but the Bank of Canada had an opportunity to address those concerns at the time when inflation expanded past the 3% bandwidth. Remember, Bank of Canada wants inflation at 2%. Why were they so resistant to move that policy rate at the time? Ultimately, they thought things were transitory. That was a big conversation at that time. We're all guilty of it. I believed at the time too that, look, the Bank of Canada is saying it's transitory. The old adage is don't fight the Fed. And that ultimately was incorrect. Inflation was here to stay as a result of quantitative easing, all the money printing that they introduced, and we got inflation. And now, ultimately, all that has been passed. Now we're starting to see things ease off. Many Canadians are paying the price, especially these higher interest costs for mortgages, rents through the roof, housing affordability in crisis mode. Well, now we're seeing a Bank of Canada are moving towards cutting rates, but have they waited too long? That's the other question. Now, how worse off will the economy get between now and June? What will the data tell us? And that is the next leg of the conversation. Most economists right now are really putting the pressure on, I guess the conversation about a June cut, June or July, either or. I think we're definitely going to see one before the summer, especially if this data consistently comes out negatively or positive for the Bank of Canada, negative for the economy, especially for those individuals looking to go out there and spend. Now, in the Consumer Outlook survey, one other thing I want to point to, and this sort of touches on the housing conversation, because remember, they're interviewing, surveying consumers and what they want to see. So a lot of consumers, one cohort, they're the ones pulling back on the spending because of the higher mortgage cost, interest, rents, so on and so forth, higher inflation, goods and services, food, fuel, energy, carbon tax. Yes, all these things are weighing in on Canadians, especially those in certain segments. But there's another segment, very small segment, according to the Consumer Outlook survey, that are planning on buying a home. And interestingly enough, in the monetary report issued by the Bank of Canada, they're pointing to a potential, maybe unintended consequence, or one that they're aware of, that home prices with lower interest rates could potentially drive up home prices a little bit further. So they are pointing to this as a possibility. It is in their base case. So we'll have to see how those events play out. Ultimately, we understand that there is a correlation between interest rates and home prices. If we start to see the Bank of Canada out of this conversation change their tune and pivot to, for sure, now we're going to see a cut from where they were prior to just this, looking at the past press conferences where they didn't want to talk about it. Well, this is definitely going to move the needle for a lot of buyers that could be on the sidelines. And we're not sitting here telling individuals, hey, you need to go out there and buy a home today. But ultimately, you need to pay attention to sentiment, how the psychology works now that the Bank of Canada is potentially leading to a cut. It's going to change the course of the housing market over the next little while. Even though, yes, there's some that can, some that can't afford it, but this is the big divide. This is the conversation around the wealth gap, and we'll leave that one for another episode. But let us know your thoughts in the comment section below. But before we end off, I think the Bank of Canada governor did get asked the question about this U.S. conversation about cutting rates. And will they cut ahead of the U.S. or will they wait for the U.S. to move? And ultimately, my thought process has definitely changed over the last little while. The reason behind that is because as we get this data rolling out of the US, right, the fact that the US economy is resilient, there's a robust economy there, we're seeing unemployment actually go down, right? We're seeing job creation go up, manufacturing wages increasing, we're seeing consumer spending still holding strong in the US. There's no real symptoms in the US to tell me, looking at the economics of the situation, that they need to cut rates, right? Even though interest rates, policy rate, their Fed fund rate is all very high, the US consumer is in a better position than the Canadian one. And if we look to this side of the border, everything's the opposite. We have unemployment going up, wages going down, in certain sectors. We also have, job creation coming down. The economy, growth is not there. So yes, there is a situation brewing right now with the US exchange as the dollar continues to weaken. Remember, the US is the powerhouse. They are, the world currency. So you have to understand that more people want US debt than they want Canadian debt. And when will the Fed cut rates, if at all? And that's the conversation that's really unfolding.
Yes, developments in the United States have an impact on Canada, both the strength of the U.S. economy, and we import particularly goods from the U.S., so that will spill into Canada. If you look at the composition of U.S. inflation, goods price inflation is not the issue. It's more service price inflation, which is not something we tend to impact as much into Canada. So I don't see a big direct imported inflation effect. But look, we'll have to look at this more closely. But I do want to emphasize we have our own monetary policy in Canada. We have our own currency that allows us to have our own monetary policy, and we're really geared towards what's happening inflation in Canada, and that's really what we're focused on from a monetary policy perspective.
Now, why is this really important? Why are we so concentrated on the U.S.? I mean, the Bank of Canada governor is saying, we're Canada. We have our own monetary policy. We have our own things to look at. And this is 100% true. But ultimately, how these two correlate, especially when it comes to the mortgage environment, is, as we've discussed ad nauseum, the bond yields, right? What happens in the U.S. with treasuries, what happens with inflation, especially with the U.S. getting a hotter than expected inflation print for the second time in a row, that's literally pushing any possibility of a rate cut in the U.S. down the pipeline to a possibility of not even happening in 2024. But ultimately, will we see the Canadian bond yields continue to pull back, even though the economy here is performing much worse off than the US? And that's literally the question this week and last week with that news, with all those inflation numbers, all the data coming out, bonds have continued to surge onwards and upwards. And it just goes to show you that when the US sneezes, Canada catches the cold, and so does the entire economy. This is a major question, but ultimately want to end it off as we wait for a couple things this week coming up. April 16th, we have the federal budget coming out. We're going to see how much spending is going to be allocated to different components, especially housing, as we hit that crisis mode. Trudeau coming out last week talking about, hey, we need to really clamp down on some of this immigration problems that we're having, because it's really putting a lot of strain on the housing sector, especially rental prices, development, a lot of stuff. Billions of dollars guaranteed to be thrown, deficit spending. We'll see how that plays out. Bank of Canada will look at that as well at their next meeting in June. And then ultimately what happens with the CPI data coming out on April 16th. Will it be less than 2.8? Will it be higher? What will those numbers tell us, especially core, medium, and trim, those numbers that the Bank of Canada really focuses on. Ultimately, if those numbers come down, we start to see things change. It just really opens up that door. But we will be tracking that on this channel, so make sure you're subscribed if you want to stay up to date with what's happening with the Bank of Canada, insights, thoughts, especially with those press conferences, to help simplify it and bring it to you, our viewers. So once again, don't forget to subscribe, but let us know in the comment sections below if you think the Bank of Canada is going to cut in June, and if so, by how much. Let us know in the comment sections below, but we'll leave the video here. Wishing everyone a wonderful Friday and an even better weekend ahead. Thanks for stopping by. We'll see you next week.